PayPal has been bridging the old way we used to do payments to the new way we're doing payments. PayPal started in a time when they accepted credit cards and made it easy to go peer-to-peer payments before peer-to-peer was really a thing. Now you can use Venmo to send, people money very easily. So PayPal has been around for a while, and they just announced their earnings this past week. I have some new updated data to reassess my analysis of PayPal and see if it's a good buy or if it's not worth buying at all. My name is Victor. I'm an MBA, a lot of business experience, and I use that experience to analyze companies and see if they're a good opportunity to invest in or if I should stay away from that type of investment. Do me a favor and like my video. Consider subscribing if you like videos like these. Now let's get into PayPal. I follow a consistent process as I evaluate a stock and to consider investing in. The process involves 4 questions followed by a decision to buy, hold, or sell. First, I want to, put myself in the shoes of an owner of the company. Do I want to be the owner? And do I want to be in that industry? Do I believe the management team's doing a good job in operating the company? Is debt under control in less than 3 times EBITDA? And I want to discount the stock. That way I could see the investment that I'm making go up in time because I'm buying a discounted stock. I'm getting good value and seeing it appreciate. Based on the answers to those questions, I decide whether I'm going to buy, hold, or sell a stock. I like the story of PayPal. Geez, about 20 years ago, they were an innovator. They really broke into the space by providing an easier way for very small businesses or even individuals to accept credit cards. And they carved out a space and created a space in over the internet. More recently, their acquisition of Venmo is a real smart one because Venmo is just so used so heavily here in the United States. It's a great way of sending money from one person to another. And I think that type of consumer adoption and familiarity with the PayPal brand is a real big asset. In general, I like the company. I like what their story is about. And I think they have a bright future. With their last earnings release, they had their financial statements, and looking at their income statement, it looks good. They grew their revenues by about 8%, which is good to see. They're already a pretty big company. They're profitable, which is very good to see. And they're bringing down the number of shares outstanding, which again makes shares more valuable. So that's very good to see. What's working for PayPal is that they're big, but they continue to grow, which is great to see. They're growing at 8%, but look at their earnings per share is also growing very, very quickly, 24%. So the growth of the company, I think they're already an established company. They've already invested all their infrastructure, and now they can really focus on profitability along with having some steady growth. Their balance sheet is in very good position. It's less than 3 times, debt is less than 3 times EBITDA. They have a fair amount of cash and they don't have a lot of debt. The statement of free cash flow, I believe that they have a pretty steady cash flow from last year to this current year. It went up a little bit, but it's a little deceiving. You see that the numbers really go down from 22 to 23 if you look at the first 6 months, but you have to focus in and see that they actually have a line there where they have originated some loans with one of their new businesses of the buy now, pay later. But as what was revealed was they're selling all that debt to KKR, meaning they have that debt, they sell to KKR, KKR gives them a big check. They're expecting a check of 1.8 billion in the second half of 2023. So that number, I'm not going to include it in my free cash flow calculation because I think it's temporary that they're going to have that amount there. But looking at their cash flows from operations in the first half, if you add the 1.5 billion and almost the 1 billion, you get up to about 2.5 billion, which is a slight increase from 2022. Their CapEx went down a little bit. So again, it remained roughly about the same. It just grew a little bit. I believe PayPal is currently discounted at 77%, meaning that I believe shares are really, they have a value of about $111 per share, but you could currently buy shares for $62.75. Let me take you through how I got to that point. I use 2 methods. I discount the free cash flows that I expect PayPal to produce in the future. And I also look at earnings per share and try to discount what earnings per share are going to be in the future. Let's start with free cash flows. I'm going to use 2022. As mentioned, I believe that they're consistently producing cash flow and the free cash flow is going up just a little bit, but I'll use 2022 and I'll grow that by about 7% per year in years 2, 3, 4. And then long-term growth of 3%. Those are nice conservative numbers to look at the growth for the first 4 years. And then terminal value, all periods after year 4 will grow at 3%. If you look at all those cash flows that we expect PayPal will produce in the future, I'm going to discount them by a 9% weighted average cost of capital. They have a very good balance sheet. It's a little bit higher of a weighted average cost of capital, but I'm comfortable with that number. I get an intrinsic value of all those free cash flows of roughly $125 billion. They have $14.4 billion of cash on the balance sheet and $10.5 billion of debt. When I add the cash and take out the debt, I get $129 billion of equity value that I believe PayPal is worth. And their market cap currently is 70 billion. So if you look at the free cash flow method, it offers up an 83% discount based on those cash flows that PayPal is producing. Earnings per share, this is the expected earnings per share that they've been guiding the street on, and they've been hitting their marks, quarter after quarter. So I'm going to use that number, and their historic PE has been 30, but I'm going to go with 24. Having a growth rate on those earnings per share of 3%. Based on those based on those figures and this calculation here, the value of each share using the earnings per share value method is $103.31. So the earnings per share valuation method says that the stock's discounted at 65%. I blend the two, taking more weight on free cash flow method. I take 2 parts free cash flow method, 1 part earnings per share method, and I get to a blended rate of 77% discount on PayPal. All right, so revisiting the scorecard, I want to be an investor in PayPal. I think that PayPal combined with Venmo is a really good business in the industry. I like fintech. I think it's a very profitable, growing part of the economy. I believe the management team's doing a great job. I think they're growing the company. They're really focused on profit, which is good. Debt is under control, and there's a very substantial discount available on PayPal. So therefore, I'm going to be buying more shares of PayPal. Looking at historically where the stock's been, it's quite a ride. Before COVID, the stock was trading around the valuation I have for it, $110 per share. But once COVID hit and people were buying things online, PayPal revenues, increased. But boy, the stock pretty much tripled in value. And then in the 2022 era, where a lot of stocks got hit, their stock collapsed, pretty much from $300 a share down to $60 a share. What a collapse. But now, as you can see, it's kind of for a year and a half, 2 years, it's kind of been hovering around under $100 per share. It offers up that substantial discount. So I like seeing that. I like investing in companies when nobody likes them. There's a lot of value there. And once things, recover, you could see your investment really go up. Think about Meta, Facebook. Everybody hated them a year ago. And then all of a sudden, they tripled in value because there was value there. And once the market understood that, it just took off, and it's still going up. Can PayPal follow the same ride? Potentially. I'm certainly willing to invest in it and see if my investment can go up in value. This year, the stock's down 15.9% year to date, showing that, hey, there is, PayPal is not a favored stock in the stock market. Everybody hates it, so to speak. And it's a pretty good opportunity for me to buy more shares because I'd rather buy when everybody hates it and get it at a discount. That's my video on PayPal. I hope you found it interesting. Do me a favor, like the video. Consider subscribing to the channel. Thanks again for watching. Good luck investing in 2023.